Alright, hello and welcome to Camel Finance. I'm your boy Camel, and second video of the day. Had to do it because we've just had the CPI data and I wanted to point a few things out. It'll be a nice short video. Let's do it. US CPI, okay, is come in cold. Said another way, we have seen inflation CPI start to come down. We are below forecast and below the previous, and year over year 7.7% headline, below 7.9% forecast, and this is now the 5th month in a row that inflation has come down. Core CPI is down as well, which is very, very important, and that includes year over year. At the same time, jobless claims 225k above forecast and previous, so joblessness is going up, and of course the Fed has said it's not going to budge, it's not going to pivot on its rate hikes until we see jobless claims start to come up and inflation start to come down. That's exactly what we're seeing. So before we go and get excited, I want to point something out. We're going to go through the charts. It's too early, first of all, to start counting chickens, but initial signs are positive in my opinion. Okay, inflation is coming down, jobless claims going up. Too early to confirm, but look for risk to come on as per my YouTube videos. If you've been watching the channel, you'll know. If you're new here, hit that subscribe button. Remember, the Bitcoin Wyckoff spring confirms at 17.6k, and watch for yields in the Dixie to come off strongly here. The melt up is in play until it isn't. Okay, on the news, we've got the Nasdaq up over 400 points, the Dow up just under 800 points pre-market, and the S&P up 115 points. When we take a look at the dollar, look at this, it's broken down. Okay, we had the rejection, breakdown, retest, and now resuming down. This is likely going to go all the way to 106, 107 before we find some sort of stopping place. Okay, so this is the first early warning signs. Okay, this is a good thing for bulls. At the same time, the chart of truth, I've been doing this, if you've been watching the channel, you'll know, over and over again, and that seems to be what is in play right now. So this is exactly what you want to see if risk is going to come on. Let's hop into a Bitcoin chart. There's this one here. First of all, I said about this, okay, we've got this Wyckoff accumulation. Was this the spring? Now, for this spring to confirm, we need to get back above the low at 17.6-ish, okay, here. Right now, we are just about getting rejected off it. So perfectly reasonable we're going to have some reaction here, but remember, confirmation that this spring is in play and that this becomes the cycle low comes from a daily close above this low at 17.6. So hopping over to this secondary chart, if we can get back above this blue line here, if we can get back above this low on a daily closing basis, I feel completely confident we can call this the cycle low. We can get long and strong from up here. The stop can come below this low, and we should have a brand new 60-day cycle in front of us for which we can play going forward. Taking a look at Ethereum, breakout, retest, resumption of this dotted line. I think, again, we want to see Bitcoin confirm, but a long can come from here in the near future. I'm pretty sure of that. XRP, I'm watching very, very closely. As I said, we took the position off at this red line. I think if we can get some follow through and back above here, I'll add this position back, and then we'll be back and long and strong continuing to push. MATIC again, look, breakout, retest, resuming up, back above $1. This is continuing to lead. MATIC, if it wants to lead, we got to let it, and I'm going to continue to do that. Gold as well. Again, it's the same thing, isn't it? Breakout, retest, resuming off above this horizontal. Gold's pushing up because the dollar is breaking down. This is a good sign. The longer term accounts, we've got Apple gapping up at open by the looks of things. So can it continue to push on? Want to see this push on if we can. And of course, the same is true of Tesla. I think if we can confirm this swing, we can start to add, or at least I'm going to start to add Coinbase, MicroStrategy, Riot. I haven't got a position yet. We're looking to get one, especially if we can break out of this blue sloping trend line, so the position will look something like that. And the same is true of Marathon as well. It looks like it's going to be opening higher. Going to probably be long in this breakout. Need to keep an eye, okay? Need to keep an eye on Bitcoin. We need Bitcoin to close above this low at 17.6. But once we start to get up above here, I'm going to take that as confirmation of a new cycle low in place. Call this the 60-day cycle low and look for a new 60-day low cycle, a new 60-day cycle to unfold. Look at the FTSE go on the news, okay? It's broken out. So this could well be a long. I'm not going to take this because I've got a load of other exposure. I'm going to be buying all of these, as I said, and I've already got longs in the S&P and in the Nasdaq. The Dow as well. Look how it's hard to be bearish, okay? Well, the Dow is going to open up and look to break out of here, and I think this could be a long, something like this, okay? This is the final line of resistance, as you can see. Once we're out of here, you could be stricter and connect the highs like this if you want to. Maybe that is the safer play, okay? But you will need a wider stop if that's the case. Once we're out of here, it's bull time. It's risk on. It doesn't make any sense. But the Fed, but the macro, but recession, I understand. But what you need to understand is the markets always bottom before the economy does, okay? I've been saying this over and over and over again. The VIX, look at the VIX getting slapped back down, exactly what I thought might happen. That means we can move this here, and exactly what I wanted to see was more downside from the VIX, and then I think we can start to long from these much lower levels. But first, I think risk is going to come on. That's certainly what the futures are pointing to. Over 800 points now for the Dow. So the early signs are there. And I want to show you one more chart. Before I go, I've shown this over and over again. If you've been on the channel, you'll know. Look where we're going to open up, okay? Gapping up, ready to begin what could be the melt up. Remember, the melt up is in play until it isn't. Right now it's in play. If we were to roll over and take out this recent cycle low, that would be bad. But all the while we're above it, we have a new cycle ahead of us. And this melt up, which I've been calling the most hated, it will be the least understood. Nobody will understand. None of this makes any sense, okay? None of this makes any sense, but this is how the game is played. This seems to be in play, and it's in play until it isn't. If you found value here today, if you appreciate the second video and the work rate, hit that like and subscribe button. Turn the notifications on if you want to see more of these trades called in real time and more of these setups called weeks in advance, as I've been doing so since the inception of this channel in March of this year. Trade safe out there. Volatility is guaranteed, upside and downside. Everything is on the table. It's definitely too early to celebrate, but the early signs are there, as I've been saying for weeks, that this is the sort of thing we'd want to see. So first things first, let's see if we can close above that low at 17.6 for Bitcoin. Let's see if the stocks can follow through and not reverse intraday. And let's see if the dollar and yields can continue to come off. In the meantime, look after yourselves. All the best from me. Take care. Cheers.